Welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy such as the Deferred Sales Trust, is the best way for you to defer your capital gains tax on the sale of cryptocurrency, businesses, real estate, high-end primary homes, so you can create and preserve more wealth. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, wealth, and sometimes cryptocurrency minds in the world, where they share their ideas, deal stories, and inspiration. So together we make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. She's out of the great state of Colorado. She's going to be discussing things that I'm still learning about and ways to invest in cryptocurrency that we haven't thought about. And she's a co-founder and CFO of Worth the Fight Fitness. It's WTFboxing.com. Also a principal at crypto fund Coin Vault. Coin spelled Quoin. Please welcome to the show with me, Emily Stork. Hey, Emily, how you doing?
Good. I'm excited to be here. Thanks.
Absolutely. Thanks for joining us. Excited to get to know you a little bit more and learn a little bit more about DeFi-based crypto investments and what's happening in that space. But before we get into those details, would you give our listeners a little bit more about your story and your current focus?
Yeah, I mean, it's a little bit all over the place, but I actually started out in corporate law, which I practiced for about 7 years. And while I was doing that, I just started becoming an investor in cryptocurrency just because it was an interest of mine, and especially kind of smart contracts and decentralized finance on the Ethereum blockchain. But my wife and I decided I wanted to launch a boxing fitness studio. And so I left my job in corporate law. I was continuing while I was working on my boxing fitness studio to kind of invest on a personal level in cryptocurrency and just get more involved in that space generally. And I sort of realized that there was a lot of really good unexploited opportunities, particularly in DeFi and decentralized finance and smart contracts. And I thought, even though I'm already working on opening one business, that that this would just be a really good investment for people who wanted to. It's kind of almost an alternative to a savings account. Because it's very simple. You really just turn your dollars into US dollar pegged cryptocurrency, and then you become a liquidity provider on decentralized finance platforms, and you can earn fees. And the return is pretty good. I mean, it can be anywhere from 20% to almost 80%, depending on which stablecoin you're using. So I thought, why would anybody even invest in these sort of more volatile cryptocurrencies when you could use a strategy where your principal is much less at risk? Of course, there's still risks, but that was kind of how I came to decide that I was going to start working on a second venture.
That's amazing. Cool. We're going to dive into that here in a minute. And I love the the workout boxing. What do you even call it? Fitness? How would you classify what is it that you have there?
It's like boxing fitness studio. So it's not boxing as a sport, but boxing for the purpose of exercise, everybody on their own bags. So we think it's more fun than running on a treadmill or something like that. So that's the reason we did it.
Very cool. I love that. I love the fitness aspect. Cool. Well, before we dive into the best kept secrets in DeFi based investments and being able to I guess land to be a provider for liquidity in crypto space, I want to take one other step back, Emily, and I want you to take us back maybe to the earlier days, maybe the high school days, maybe the university days, maybe the law school days, right? I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. Some people call them superpowers, some people call them strengths. So I'm curious, what are those one or two gifts or strengths that you believe you were given, and how does that help how you help and bless people today?
I would say that when I get passionate about something, I just spend a lot of time really digging into it on a deep level and investigating it. And I think that's kind of how I came to discover the strategy that I did. Even though I'm not technical in any way, I don't know how to program my own smart contracts or anything like that. It just, I guess the other thing would be that I just like to, once I dive into a project, I like to do it at a really, really high level and optimize everything to, which is very important in business, obviously, but a lot of people don't do it. So.
Yeah, no, exactly. The fundamentals of certain things. I love that. So your passion creates a deep level of knowledge and curiosity, and then a deep dive into expertise. It fuels that, and then also kind of making it like as perfect as it can be. Is that a fair summary?
Yes, that was better put than mine.
Well, cool. Very cool. Now let's dive into exactly using those gifts to help people with this DeFi-based crypto investments. So what's the number one secret or even step one to understanding how to be a liquid provider of crypto in that space?
Well, I think actually what really helps people to understand, you have to take a little bit of a step back and think first about like how centralized exchanges work. Basically, like if you want to go and sell an asset on a centralized exchange, there's a market maker who will make a market for you and basically sell or buy that asset for you. But on a decentralized platform, the whole idea is there is no, third-party intermediaries. So as a result of that, what they have kind of as a solution, they've incentivized people to essentially lend out their own cryptocurrency to make a market in different cryptocurrency assets. And the way they incentivize that is by paying you fees. And so that's where like this return comes from. Because a lot of people hear like, oh, you can make a 20% return on like basically what's a US dollar. And they're like, there's got to be some kind of weird scam to it or something like that. But you're really just providing your own cryptocurrency to enable, as liquidity to enable people to make exchanges. And so that's kind of like having that's sort of the understanding of where the actual return comes from, those fees.
So let's pull this out a little bit, right? So I have 25,000 or so and a couple coins, okay? Personally, right? So I show up and I go, Emily, I've got like 25,000 and it's been doing pretty good. It's making some money, but I'd like to put this stuff to work for me and start making some cash flow, some interest. So I go and what's step 1, 2, and 3?
So, there's a few steps. First of all, most people's cryptocurrency is something like Bitcoin or Ethereum. You can actually do this strategy with those coins, but since we're talking about using stable coins, what you would need to do first is obtain some actual stable coins. Those are things like USDC, USDT, DIA. There's many of them. You can find a list of them, and you can obtain those on centralized exchanges like Coinbase. And then after you have your stable coins, what you would do is go to a platform like Aave, Curve, Yearn. Like these are big DeFi platforms and you would put your DAI, USDC, USDT, whatever it is, into their smart contract. And then you would begin to earn fees on it. And you would be able to withdraw it, whenever you want. If you want to withdraw it the next day, you can. I mean, probably Yearn is the best one that I would recommend because they kind of have automated it so that you can kind of get the highest return without you having to go in there constantly and harvesting the fees yourself.
Excellent. And how do you spell that last one to make sure I have that?
Yearn, it's YEARN. I guess it's YEARN.
All right. So again, 25,000. I'm like, okay, sweet. And I transferred into some stable coins. Let's just call it USDC. And
yes.
maybe I traded my Bitcoin, my Ethereum, whatever, right? Now it's in USDC. Now I move it over to Yearn, okay?
Yes.
And I put it on Yearn and I click automate, I click lend, I click,
click deposit, I believe. Yeah, deposit.
Sure. But then as far as getting the returns going, like what does that look like?
That's all you do. I mean, it'll just start generating after that. And then whenever you want to withdraw it, you'll be able to withdraw whatever you put in plus whatever you've earned.
Got it. And that'd be taxed
by ordinary, simple. Yes.
Ordinary income tax, right? On the interest that it earns, probably.
I would assume
it's probably so, but I'm thinking of like an interest-bearing account, right? Where you're talking to a bank and like, hey, I got a bunch of money. Here you go. Pay me my interest. They take the money and they go loan it out to someone and they make a bigger interest. Is that basically what's happening? But we're cutting out a lot of the middlemen. Therefore, we're able to get the middle men and the women, right? Because the women are making the money too over there at the banks, right? We can't leave them out. And then we're able to get that higher return. Is that a fair summary so far?
Yeah, that's basically all that it is. And because what Urine does is it takes these deposits from a whole bunch of people and makes like one big deposit onto another like DeFi platform, and then they harvest the fees every day, and then reinvest them. So it's kind of like the most efficient strategy. If you were to do that yourself, you would get eaten alive by Ethereum fees, because you do have to pay fees to do these transactions. And when you're doing them, you really need to take into account like how much those fees are, because if you only have $100, $500 that you're doing this with, it may not make sense because it's going to take so long to like earn those fees back. I mean, there are other platforms that you can use, like Polygon is a good one. There's Binance. There's, honestly, I won't list them all because there's a lot, but and a lot of them do have lower fees. So if that's like something that's important to you,
literally personally, the 25,000 in crypto that I had, it's been sitting in the account. It's fluctuated from 12 to 40 to 30 to 20 to 20, but what you're saying is, Brett, you could have put that into Yearn or Polygon and have been earning some percent over time.
Yes.
Regardless of the highs in the, or I guess if I'm in USDC, I'm no longer in like the Bitcoin, right? So I'm technically in that new stable coin, right?
Yeah, I mean, you can, if you want to make this strategy a little bit more complicated, you can use a decentralized lending platform, put your Bitcoin onto something like Aave, borrow the USDC, and then take that USDC and put it into Yearn. So then you still have your exposure to Bitcoin, but you also can kind of earn. Or there's also Bitcoin vaults on Yearn and other similar platforms. So if you just want to put your Bitcoin in and earn on Bitcoin, you can. But sort of the reason why, like, at least I intend for my fund to focus on stable coins, is because I wanted to get rid of that volatility that you have with like the Bitcoin exposure. Because I was like, if I can earn like 20% or more on stable coins, like why would I? That's pretty guaranteed. I mean, yes, there are risks. There can be hacks. There can be even a stable coin possibly losing its peg, maybe. I mean, those are risks. But like overall, to me, it just seems like Bitcoin is so volatile. Like these stable coins are fairly stable and you can earn a return. So it just seems to make sense, especially if you are a high net worth individual. You don't really need to take these massive risks, right? You just want to preserve your wealth. So
very fascinating. So let's say we take the reverse. You have 100 grand just sitting at the bank, making next to zero. And I'm like, all right, let me buy some USDC. Let's put it on Yearn, and let's start making 20%. Is that pretty conservative right now?
Yeah, I mean, I guess I haven't checked the Yearn vaults like recently. I mean, it depends on which stablecoin you're using. Some of them are a lot higher than 20%, but it probably is because the underlying stablecoin might be a little more risky. I mean, definitely like, 10, 20, 30, it can go even higher.
What's the risk, right? So I guess that's the other thing, right? So give me like your experience with that, and like, besides people not even knowing about this or knowing how to do it, which is a big percentage of, let's say 95% of the people. So let's assume they know it, and what's the risk for the money if you put your 10 grand or 20 grand or 100 grand in?
Well, there's a couple things. Number one is hacks, or even like what they call, oh, are you still there?
I am. Yeah, I just put you on.
Oh, okay, sorry. Even what they call rug pulls, which is like an inside job where your coins are like stolen by the person who makes the decentralized finance platform. But something like Yearn is it's like one of the biggest platforms there is. It's very reliable as far as DeFi goes. So from that perspective, they've also, the times when they have been hacked, which I think is one time, maybe two, they've always paid it back using insurance. So like, if you go and put your coins onto some more sketchy DeFi platform, then your risk is higher. But I don't consider that risk to be very high with Yearn. The other risk is with the stablecoin itself losing its peg. Like all these stablecoins have different ways of being pegged. Like you may have heard of stuff around US dollar tether. That's kind of the one that they said they were like every tether was secured by $1, but then like it kind of came out that wasn't exactly true. And so they have different ways of maintaining it. There's like collateral in some cases. There's like weird algorithms, but like those things, can go wrong potentially. But again, with these stable coins like US dollar coin, that is actually there's a very big company in the crypto space called Circle, and US dollar coin is their coin, and it is centralized, so that has its positives and negatives, but it's a pretty reliable as far as like price goes. Like I don't have too much concern that it's gonna get very, but stable coins have come off their peg. It does happen, especially during like big swings in the market, especially if they're secured by collateral. It suddenly loses its value. So that is the other possible risk. And I honestly think the reason most people haven't done this is not those things, though. I think it's more just the it's a little bit of a pain to learn how to do it. It's not the most intuitive thing. And that's in a way why I think that this fund that I'm making could actually, be something of interest to people. I mean, I've already gotten people coming to me asking about it, but they don't have to learn all of those things. They just let somebody else do it and they can still get the return. The one other thing I would say, it's not exactly a risk, but it's sort of related, is just fees, with the fees to use Ethereum, because they can be pretty expensive and it's very easy to kind of just like, you don't want to be burning so much on fees that you're not really like earning your returns. Like with $25,000, that's a pretty substantial amount. So the fees shouldn't be, overwhelming. But even with $25,000, you have to pay a fee to like move the 25,000 to the proper wallet, and then another fee to like approve it to be put on to Yearn, and then another fee to deposit it, and then another fee to withdraw it. So these kind of add up over time, At times, those fees have been like, over $100. You do have some control, like you can set it lower if you want, but your transaction might not be confirmed. So it's a little bit, so that's another reason why it sort of was like, okay, if I can get, a lot of money together and then make the deposit all at one time, you save a lot in fees. So
it starts to scale, right? And if you have enough time to hold and wait and obviously get that return back on your investment, like you don't need the money right away. And that's like anything else. Time horizon is the number one factor when it comes to investing. Very fascinating, Emily. And by the way, coinvault.com, spelled QUOIN, vault.com. I want to dive into that now in your service to make sure we're connecting the dots here. So again, why was it started? What does it do? And if someone wants to get started with you, what's the steps?
Yeah, so really it was just when I realized that I could make pretty much like a very reliable return on what is essentially a US dollar, using platforms like Yearn and Curve. And I was like, why would people want to be exposed necessarily to the volatility of something like Bitcoin or Ethereum when they could just have something that's essentially like a savings account, as you put it? You just take your dollars, swap them into cryptocurrency that's pegged to the US dollar, and then put them on these platforms. But I think there's still a reason to have the fund that I'm working on, because like, as you just mentioned, it scales. So you take $10 million or whatever it is, and you put it, turn it all into stable coins, put it all on Yearn, and now you're saving all of those people a lot of money on fees versus if they did that themselves. And I think that the other thing that's great about it is, unlike a lot of investments, you can withdraw at any time. So, it's pretty liquid, which is nice, especially since if you want to compare it to a savings account, you kind of want that ability. Of course, like you may have to incur a little bit more fees if you withdraw at a weird time, but still, you're able to withdraw it.
And my 10,000 that I put in real fast, Emily, like, is that subject to volatility? Well, I guess the USDC could go up or down, right? Or do I get that upside, and am I subject to that? And I'm also lending it out. Or walk us through that. Or is it only when I actually sell it? Can I, even though the value is high or low, I'm pegged? Or how does that work?
Yeah, I mean, there's really not too much fluctuation. I mean, maybe it'll be at 101 or 99, but it really doesn't move too much. So from that perspective, you can't really count on like earning anything.
I'm with you. It's just the loaning of it, right? So if I bought Ethereum for $1,400 and then I sell it for $3,300, and I cash out and I move that into the stable coin. Now, let's say that's, I don't know, $1 million worth of Ethereum, right? Now I can start to do that. Is that making sense? Am I doing that right or what?
Sorry, I didn't understand that.
Yeah, so like I'm trying to figure out basically when I sell to get there, right? When I sell to get there, or I guess I buy to get there, the USDC is going to be pretty limited to movement. It's not so much the volatility of the Bitcoin or the Ethereum, and then from that I'm able to lend out. and make the return. I guess is
Yeah,
kind of the same thing we
you're
said before.
yeah. Sorry. Yeah, you're basically lending out your coins as liquidity on, and I mean that does, you are like getting that smart contract exposure from that, but that's how you earn your fees.
Perfect.
And that you
So
make
someone shows up to you and says, "Hey, okay, I don't understand as much. I trust Emily and her team to do it at CoinVault. I like to do it in scale and try to get, like maybe like the Costco effect, right? We all go to Costco and we get a lower price because we're all members.
Yeah.
So we're all members. We're with CoinVault. We're all coming together to do this. Is that a fair summary? And then you're able to negotiate a better deal.
Yeah, you get a way better deal, and you don't have to worry about kind of dealing with any of kind of the aspects of it yourself. I mean, it's not like people could certainly learn how to do this, but like there's better security than if you do it yourself. And
what's the minimum? I'm ready to go, Emily. What's the minimum?
I haven't said a minimum yet, but I would say it's probably going to be like $25,000. I'm not sure.
Cool.
I'm really just like starting to work on this, so I didn't want to.
This is great. No, I love it. By the way, you can learn more at coinvault.com. That's QUOIN vault.com. Any last thoughts on that before we shift into like we're going to geek out on some capital gains tax stuff with crypto in a minute.
That would be actually great. I would like to know some of that stuff because I'm dealing with my own crypto taxes. So no, I think that's it.
Okay, perfect. So let's shift into that. And it starts with this question, like what's the biggest frustration when it comes to capital gains tax deferral options on the sale of highly appreciated cryptocurrency?
I don't know if I can answer that. I'm sorry. But I will say that it is very frustrating. Like there is not good guidance from the federal government about how to treat crypto transactions, especially in DeFi, because you are technically like swapping, like when you go and put your US dollar coin into Yearn, you're getting a different token back that kind of represents your US dollar coin plus your yield. And some people have argued that should count as like, swapping assets. Like that's sort of like a moment where you're, I guess, incurring. It's like, do you count the tax at that point, or like when you get back out of it?
Actually get the cash in your hands, right? Versus just trading it, right?
Yeah, and it seems like I think they just need to clarify it. Like, I'm not sure how to treat it, and you do a lot of transactions, and so that makes it even more I don't know. I don't think when you switch from one crypto to another necessarily that you should incur tax. I know that's how it works, but it seems like what it should be when you move back into the US dollar. That's the point where you should be taxed, but that is not how it works. But I do think you can kind of use that to your advantage by like purposely selling at a loss and then immediately buying back to kind of like register losses, I guess, to like offset gains. I haven't been doing that, but I guess
there's some different ways that people have done it, but I think they're cleaning up some of those laws to make it where you have to hold for a certain period of time versus folks kind of maybe they look at it as gaming the system. But that being said, we do have a solution for those who are selling highly appreciated cryptocurrency, Ethereum, Bitcoin, to defer capital gains tax, and it's called a Deferred Sales Trust. In fact, I'm really curious, Emily, to see what you think about this. I met with a couple about 6 months ago, and this is the couple. They bought Ethereum for about 100 grand, over the last 5 years, and in 2017 it shot up to 6 million. They're looking for a reason to sell, looking for a way to sell, but they ran out of time, and because they wanted to defer the tax, but they couldn't figure out a way. It crashes from about 1,400 at that point down to I think it's like $90. It crashed, and then it went all the way back up to like 4,000, right? And then it crashed again to 1,800. But anyways, as of about 2 weeks ago, we sold the first Deferred Sales Trust. They had about 13 million worth, and now it went down to about 5 million. They sold 5 million of that, deferred all the tax. So, and they're able to put it into cash flow producing real estate, put in some diversified liquid investment grade securities. They're able to get a lot of cash flow and just, take some chips off the table, right? And so I'm curious, do you think that might be of value to some folks who have bought low and are wanting to sell high?
Definitely. Yeah. I mean, it sounds, I haven't heard of that before, but it does sound like a great thing. I mean, Yeah, I would definitely look into it. I haven't done a lot of selling out myself either. I've just been buying over time. Just like, I don't know, I guess I just realized after a while that it was better to just buy and hold. So that's what I've done. But eventually I'm up, everybody wants, the whole idea is to get it back into dollars somehow. So
Yeah, exactly. And yeah, to get some cash flow, some diversification, just sell high and buy low again, right? Without paying the tax, be able to defer the tax. By the way, you can learn more about that at capitalgainstaxsolutions.com. It's called a deferred sales trust. That particular $5 million deal, it was about a deferral of about 1.5 or so million extra. And then they have some target prices for the future as well. Again, that's capitalgainstaxsolutions.com. That being said, Emily, are you ready for the lightning round?
yeah.
All right. Knowing what you know now, if you could go back to your 20 or 25-year-old self, what's the one golden nugget you'd make sure to tell yourself to do?
I would say just always ask. Like, don't be afraid to go after what you want and just like approach people who, for whatever it may be, for a job, for a partnership. When I was that age, I was always like timid about those things. But yeah.
Ask. I love it. Ask and you shall receive, right? If you don't ask, the chances are no, right? I mean,
Yeah.
it's already no, right? Because you didn't even ask. It's like Michael Jordan said, you missed 100% of the shots you don't take, right? Take a shot. Second question, number one book you've recommended or gifted the most in the past year?
Um, Well, I really enjoyed the book Dark Pools, which talked about it. Actually, I read it before all of this crazy GameStop stuff happened, but it just kind of talks about like kind of the development of the modern exchange and the ways that it's manipulated by financial institutions or just the market and liquidity. And so I just found that very interesting and very relevant these days. So much stuff is coming out about payment for order flow and all sorts of other machinations that big financial institutions engage in. And so I think if that's something, and so many people are becoming interested in it, so, which is great.
That's really cool. Favorite M&A fighter?
I'm gonna have to say Ronda Rousey because she's the only one I know. Even though she's probably not my favorite, but
For sure, for sure. Next question. What are you most curious about right now?
I mean, I guess I'm going to have to say still smart contracts and DeFi and where all of that's going. I mean, I do know a lot about it, but there's so much more too. And I mean, I definitely like to learn how to like program them myself, but I don't have that technical background. So, but I might. We'll see.
That's awesome. Last question. We always wrap it up with this one. After all your success, being an attorney, starting the business, and now with coinvault.com launching that, getting that going, how do you stay centered in your values, and how do you stay encouraged to charge forward to reach new heights?
I think always making sure to plan breaks. Like it's just really, really easy, especially if you're very passionate about a project, to just be working on it constantly. I mean, that's kind of how it was with us in the business, working like 12 hours pretty much every single day. But it's just really easy to get burned out. So if you don't have like, planned breaks, and also especially like time with your family, your wife, husband, I think it's easy to just kind of like get that burnout. So that's what I would recommend.
Beautiful. Hey, I want to thank you so much, Emily Stork, for being on the show, sharing wisdom, helping us understand how to invest.
Uh-oh. I think, hold on a second. Yes. I think I like dropped off, but I don't know if he's rejoining or if that's the end. Okay, I think, oh my gosh. See if this,